Today is Sunday, September 7th, and this is another update on my progress of beating the S&P 500 along with Bill Ackman's Pershing Square holdings. I do make these videos every Sunday and Tuesday, so if you want to follow along, go ahead and hit that subscribe button and let's get into it. Since my last update, my portfolio had a decline of 0.41%, Pershing Square saw a gain of 1.96, and the S&P 500 had a gain of 0.32, which brings us year to date. My portfolio is at a gain of 23.58, Pershing Square is at a gain of 22.67, and the S&P 500 is at a gain of 10.44. If we take a look at the earnings calendar for this week, you'll see that the only company reporting on my watch list is going to be GameStop. It's not currently in my portfolio, but it's still important to be aware of earnings for other companies as well. For the events this week, Wednesday and Thursday are going to be the only days with scheduled events. Wednesday, we're going to see the producer price index before the market open, and then Thursday, we get the consumer price index along with initial jobless claims, and those are both also before the market open. The general consensus is that the PPI and the CPI are expected to rise some when the numbers do get released. So even if the headlines read that they increased, as long as it's not more than what's forecasted, the market shouldn't react too negatively. On the other hand, if it does go up more than expected, that could certainly mean trouble for the markets. If we take a look at the SPY chart, for the last update, the SPY price was right at the 5-day moving average, but both the SPY price and the 5-day were still above the 15. On Tuesday, the SPY price did, however, close below the 5 and the 15-day, and also closed directly at the very long trend line I've been talking about recently. That only lasted for a day though, because the SPY price then closed at the 5-day again on Wednesday, and then Thursday it got back above it, and currently it's exactly how we want it. The SPY price is above the 5-day, and both of those are still above the 15. All of the news events from last week were definitely not great. The labor market weakened significantly, job openings hit a 4-year low, ADP reported slower hiring, and the BLS showed minimal job growth, raising concerns about the economic momentum. So to still be trading where we currently are is definitely a little bit surprising to me, but I think it's because this definitely means a rate cut is coming at the September Fed meeting. Right now, there's just a slightly below 90% chance of a rate cut. Powell has made it clear that he expects 2 more rate cuts by year end. The only real way I see the next Fed meeting going bad is if they cut the rates, but then say that they're not sure if there's going to be another one this year or not. It's going to be important this week not to dip below this long-term green trend line. The last 3 dips have had higher bottoms than the previous one, so if the SPY price does dip below the trend line this week, it would almost guarantee a lower low than the previous one, which would probably start to get some people a little nervous about the markets, because eventually we are going to get a dip, and by having cash ensures I'll be able to either add more to my current positions or enter into new ones at a good level. These are going to be all 14 of my current positions. Right now, Nvidia, Microsoft, Meta, Palantir, and Welltower make up my top 5, and those make up 38.56% of my portfolio. Nvidia and Palantir didn't have the best week, and making up a total of 15.74% of my portfolio was definitely a major drag. Shopify and Spotify did have good weeks, however, but only making up 12.39% of my portfolio wasn't enough to cancel out Nvidia and Palantir. At my next best opportunity, I would like to get Shopify and Spotify both as more heavily weighted holdings in my portfolio. Like I mentioned earlier, right now I'm at 82.29% invested, which leaves me with 17.71% sitting in cash, so I definitely have the flexibility to do something like that. Sprouts Farmers Market is also now at a loss of 7.77%, so depending on how the chart looks, I might be looking to increase that as well at some point coming up. And even though it's down, if the charts look good, I would do that in hopes of catching a rebound, and that is my second smallest position, which right now only makes up 3.54% of my portfolio. Other than that, I don't really expect to make any more changes to my portfolio this week. That's going to do it for today. I do make these updates every Sunday and Tuesday, so if you want to follow along, go ahead and hit that subscribe button, and I'll catch you on Tuesday.